Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 1st of April, April Fool's Day actually. First day of the month, first day of the quarter. Quite a lot of data actually to talk about. We began this morning with the Japanese sentiment survey, the Tankan, over here. For large manufacturers, the number came in slightly below estimates, about 12 versus a reading of 14 expected. But from a services point of view, which is the non-manufacturers index, the number came in not too bad at about 19 versus 17. Now, looking over here, we saw a little bit of a reaction on the US dollar yen pair. When the numbers came out, we saw a little bit of a sell down, but we are starting to see a little bit of a regain of that level. Obviously, it remains to be seen where we go, but it's going to be a day full of numbers from obviously Japan into China and then over into the EU and the US. At 9 o'clock this morning, we saw the Chinese PMI numbers being reported. It came in actually a very good reading of 50.1. This above 50 level is actually an important mark for the index to be breached, and this compares against a forecast of around 49.7 and a previous reading of 49.9. However, at 9:45, which was just a few minutes ago, we saw a number of 49.6 on the HSBC PMI number. This survey is a survey more of smaller manufacturers in China, and a lot of people are actually looking at this number as a better indicator. And it came in at below 50 against the previous number of 50.7. In fact, at 49.6 reading may not be the most flattering of the numbers, but ultimately it also represents to the market that perhaps stimulus or further stimulus may be on the way quite shortly, and many people in the markets are actually looking for the PBOC to either cut rates or cut RRR ratings as early as April. We see here the China A50 index, and it's an index which I refer to quite constantly, being sold down very hard last night towards the close, about down as much as about 4%. Now this 4% may be worrying if you look at it just from a day's point of view, but if you draw it in perspective to the huge move that we have alluded to before, it clearly is actually quite a healthy consolidation phase, looking to settle at around this level, hold around this level, and maybe it could project up again. Going into later into the day, we're going to see numbers coming from the EU, the UK PMI, and obviously a bigger number from the US, where policy divergence is still the key talk, and will obviously have bearings on not just the dollar index, but the key pairs of the Aussie dollar and the Euro dollar. So lots of numbers, lots of data points to be trading off. And furthermore, I just want to add very quickly, the EIA weekly numbers, this being Wednesday night, will also have a further bearing on crude here, which seemed to have settled and consolidating nicely its big move last week. Anyway, just a few thoughts for the day. Happy trading, everybody.